What's going on, everyone? I just recorded this whole video, realized I wasn't recording, so I got to do it all over again. But hey, that's okay. I'm retarded. So we're going to look at the reporting of securities loans. They're requiring securities lending transactions to be reported now, which is kind of huge. So we're going to look into this. And yeah, we're going to break this apart. This is like a 180-page filing, so we're going to break it apart. We're going to look at the market structure and the intended objectives for this one, and we're going to go ahead and get started. So introduction, market background. The securities lending markets or market is opaque. Great way to start. Section 984 of the Dodd-Frank Act provides the Commission with the authority to increase transparency, among other things, with respect to the loan or borrowing of securities. It also mandates that the Commission promulgate rules designed to increase the transparency of information available to brokers, dealers, and investors. Although various market participants, such as registered investment companies, are required to make specified disclosures regarding their securities lending activities, parties to securities lending transactions are not currently required to report the material terms of those transactions. Good call. Now, in case you were wondering, the value of securities on loan in the United States as of September 30th, 2020, a year ago, about a year and 3 months ago, was estimated at almost $1.5 trillion, which actually happens to match the repo demand we currently see today, which repo equals securities lending. It's basically the same thing. Yet, despite its size, the securities lending market in the United States has a general lack of information available to its market participants, the public, and regulators. Based on the lack of transparency and statutory objective to increase transparency in securities lending transactions, the Commission is proposing Rule 10C-1 under the Exchange Act, which would require any person who loans a security on behalf of itself or another person, ergo a lender, to provide the specified material terms of the securities lending transactions to an RNSA, as discussed more fully below. And we'll define what an RNSA is later on. Now, as far as a lender, when used in this release, it refers to any person or persons that loans a security on behalf of itself or another person, including persons that own the securities being loaned, which are also called beneficial owners, as well as third-party intermediaries, including banks, clearing agencies, or broker-dealers that intermediate the loan of securities on behalf of beneficial owners, otherwise known as the lending agent. The term lender does not extend to the borrower of securities, so this is not extending to the borrower in a securities lending transaction or any third party that intermediates the borrowing of securities on behalf of the borrower. Way to make it confusing, Gary. Whoops, skipped one. Private data vendors have attempted to address the opacity in the securities lending market by developing systems that provide data to clients who both subscribe to those systems and provide their transaction data to the data vendor. Only subscribers can use those systems to receive information regarding securities lending transactions. Moreover, as the private systems capture data only from their subscribers, the available data is not complete, nor is the transaction data captured by these private vendors available to the general public without a subscription, or available in one centralized location. What does that matter? At least we have third-party availability for this data. You don't provide any shit for brains. Anyways. Industry observers and market participants have suggested that that the commissioner consider measures to provide additional transparency in the securities lending market. Furthermore, there have been other calls for additional transparency, including in testimony during a hearing before the House Financial Services Committee on March 17, 2021. Such testimony supported the creation of a consolidated tape or a public data feed of securities lending transactions. The lack of public info and data gaps creates inefficiencies in the security lending market. The gaps in securities lending data render it difficult for borrowers and lenders alike to ascertain market conditions and know whether the terms that they receive are consistent with market conditions. These gaps also impact the ability of the Commission, RNSAs, and other self-regulatory organizations and other financial federal regulators, or collectively regulators, to oversee transactions that are vital to fair, orderly, and efficient markets. Indeed, the size of the U.S. securities lending market can only be estimated as the data currently, quote, available on securities lending transactions are spotty and incomplete, unquote, whatever that means. Furthermore, the FSOC 2020 annual report noted data gaps in, quote, certain important financial markets, including transaction data for securities lending arrangements, unquote. 2. Intended objectives. To supply or to supplement the publicly available information involving securities lending, close the data gaps in this market, and minimize information asymmetries between market participants, proposed Rule 10C-1 is designed to provide investors and other market participants with access to pricing and other material information regarding securities lending transactions in a timely manner. For example, the Commission preliminarily believes that the data collected and made available by the proposed rule would improve price discovery in the securities lending market and lead to a reduction of the information asymmetry faced by end borrowers and beneficial owners in the securities lending market. The Commission also preliminarily believes the proposed rule would close securities lending data gaps, which would increase market efficiency and lead to increased competition among providers of securities lending analytics services and to reduced administrative costs for broker-dealers and lending programs. The Commission preliminarily believes also that the public disclosure of specified material information regarding securities lending transactions could improve efficiency in the securities lending market and the securities market in general by reducing frictions that can exist where pricing information is not publicly available. In particular, providing access to timely, granular information about certain material terms of securities lending transactions would allow investors, including borrowers and lenders, to evaluate not only the rates for such transactions, but also any signals that rates provide. For example, that changes in supply and demand for a particular security may indicate an increase in short sales of that security. In addition, increasing the accessibility of data could lower barriers to entry for would-be participants in the securities lending market, as well as the securities markets more broadly, because all market participants, not just counterparties to a trade or those that subscribe to certain services, would be able to view and analyze transactions that are taking place in the securities lending market. As a result, the disclosure of the specified material terms of securities lending transactions might improve the efficiency and resiliency of the securities market by reducing frictions in the cost of borrowing securities, which may also have positive effects on the market for the securities themselves. Yippee-yi-yay. Additional benefits from increased transparency could include increased savings and profits for investors, improved terms for beneficial owners participating in lending programs, and improved competitiveness in the lending agent and broker-dealer business. The proposal might also reduce the cost of short selling and lead to an increase in fundamental research, which contributes to more efficient prices. Finally, access to additional data can contribute more informed portfolio management and lending decisions. So it sounds to me like they're going to start reporting securities lending data soon. And it could also reduce the cost of short selling, so maybe they're about to short the piss out of the market again like they did last January. I don't know. Anyways, that's it. We're going to get on with the next one. Jack to the tits for more filings.